Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, January the 14th, 2011, and it's time to look at the market, so check it out. Okay, let's go around the globe here. We start off with Australia. What you have here, let me get the tools out, is we've had this uptrend in effect for a while now. You've had a nice bullish move to the upside here. At this point, it broke out of the previous high. All right, nice pullback here. And at this point right here, you have a bullish engulfing of this candlestick formation, giving you a buy signal. There would be your stop. Up she goes. Started to get some weakness a couple weeks ago. We told you that at this point you'd be out waiting for another buy opportunity, another buy signal, and we pulled back down here and stayed within the uptrend and is now this week giving us another buy signal, another bullish engulfing opportunity here and a higher close. So this is telling you if you're bullish, you would be actually looking at this as a buy signal, and you'd be a buyer here with a stop, a tight stop right there. Okay, basically using this uptrend as your strategy to continue to move forward. You'll notice that the RSI, which signals extreme overbought and oversold conditions, whenever it hits 70, it's extremely overbought. When it's 70 or higher, and in this particular case is at 61.13, so it's got plenty of room to move to the upside. So this does look bullish. A quick look here at the Dow Jones Industrial Average. We've had a hold on this for a while. She's still very bullish ever since this last buy signal we had it right here. You had a nice bullish engulfing. You put a stop right here. She's advanced for 1, 2, 3, 4, 5, 6, 7 consecutive weeks, higher highs, and we like that. So we're going to keep that hold on that. You'd still be able to find opportunities in the Dow Jones Industrial Average for the long side. You'll also notice you are now getting the RSI 70 line just about there. You're at 69.99. At 70 or higher, it's considered overbought, and it can stay overbought for a little bit. So don't think just because she needs to be up there or she's close to being up there that all of a sudden she's going to reverse on you. It doesn't have to happen that way. And one of the things that I've learned recently, and thanks to the Fed, is stop calling peaks. Don't do it. Just let it absolutely reverse and kick you out, and at that point you will see it a nice bearish engulfing. Whenever you see that situation, that signal, that weakness, then you can exit the long side and maybe even take a little bit of a short strategy. But until that happens, just trade the trend that you're in, and the trend we're in right here is obviously very bullish and can remain that way as long as it does. So use it to your advantage if you can. One of our members was talking today about the problem with putting a tight stop loss limit on something when if you had another flash crash situation, your stop may not actually help you. Well, that's true. That's something you have to take into account. So what you could do, one of the methods that I'm using personally is I'm using options so I can define my risk for the moment that I enter the trade. Another guy may actually decrease the amount of money he's deploying into trades as to protect himself. So there's different ways you can play it. You just gotta, be smarter than the situation, and you can find a way to make money in this market. All right, quick look here at gold. We've been in a bullish uptrend back here. We got a bullish buy signal, advance for a little while, another buy signal here, stop would have been here, advance up here. Weakness right here, you would have exited that trade, been stopped out, and that trade, even though she ended the uptrend, she actually just moved sideways. That can happen, and here we've been doing that for a while until last week. We told you you had a sell signal right there, and that's what's the last signal we have here. So, and I also point out that I would not be shorting these guys, me personally. I'm just not going to do it. It doesn't make fundamental sense to me with all the printing of money out there. Gold seemed to go higher, not lower, so I'm not going to get into that trade. Though we did see more weakness here, and you could see even more. You're now pulling back to the middle Bollinger Band line. You could, in theory, pull all the way back down to the lower trend line, the older trend line here. You could do that, which also be in line with previous resistance now acting as support. So you could see that, but I think you'd get a lot of people buying that pullback there. So again, I don't see a lot of downside potential there at the moment. But it should be noted that it's obviously not a buy at this point. All right, quick look here at the Hang Seng Index, Hong Kong Hang Seng. About 3 weeks ago, we said this was an awesome looking chart. You got to get bullish on here, our most bullish chart at the time. And she's been steadily making money, 700 points here, another nice little chunk of change here. And we actually had a trade here in the U.S. as a company that's making money over there in China and that trades here in the U.S. markets. And we use that as our perfect stock alert based on this chart here, and it's already up 138%. In 2 weeks. So we like that. It was a nice little move there. We still see this as a continuation candlestick. Could continue to press higher and test this previous high here. And you'll notice you're only at 62.87 on the RSI. nowhere near overbought, so she could continue to run. Don't anticipate failure. Let it show it to you before you jump ship, and definitely don't short something like this. What I would do is advance my stop loss limit. The higher she goes, we keep advancing the stop, okay? Quick look here at the BSE index, India Bombay Stock Exchange. Told you last week that this guy had a nice sell signal, bearish engulfing of this previous candlestick, very bearish. And this is the second one we've seen. What you had here was a move to the upside, then a bearish engulfing. That would have been your first sell signal, but it was an all-time high, so a lot of people don't want to short there. A pullback, then a bounce around, no buy signal, and then we bounce back up here and get another one. And this is starting a downtrend here. You'll notice that these high points are consecutively lower, and so you can maybe have a downtrend actually developing here. And in fact, we told you last week was look for this uptrend line to break down this week, and that's exactly what happened. And so this sell-off you had right here actually went lower than the previous. That confirms the downtrend. So at this point, you do have that downtrend line in effect there. It would be a sell. It makes sense to me. You also notice this here, this candlestick formation is a continuation candlestick to the downside. It's not a reversal signal. A reversal signal looks like this, a hammer formation, something like that, something like that. Those are reversal signals. That would make sense to see those. If you saw those, you'd expect a bounce. But in this situation here, major continuation signals to the downside, you wouldn't be expecting a reversal at this point. You'd wait. Even if I started to see hammer candlestick formations, I won't get involved unless I see a bullish engulfing signal, okay? Quick look here at the London Financial Times, the FTSE FTSE index. What you got here is a nice uptrend line going on here. You could draw from here as well. We'll do it from here from now. And we told you last week, you tried to give a bullish engulfing signal, couldn't hold it into the close, pulled back down, showing some weakness here. This week, same story. It's a doji formation here. It's neither bullish nor bearish. It's indecision by traders, and basically what you're seeing here is just a little bit of this kind of number going on. All right, you're just consolidating here. This can continue and will break in one direction or the other. Don't anticipate what it's going to do. Wait until it shows itself to you before you get bullish or bearish. Back here was your last buy signal. You had a nice bullish engulfing here. You could have put a stop right here, advanced it 1, 2, 3 weeks to the upside before you get a little weakness, and you could have exited that trade with a nice little profit. Wait for the signals. A quick look here at the NASDAQ here in the US. You'll notice you have this uptrend line going on here, and she is making a move higher. Back here was your buyout signal right there. Stop was here. She advanced for 1, 2, 3, 4 weeks before you got a little bit of weakness. Could have exited there or advanced the stop to the low there. Regardless of what you did, either you're out or you're still holding and she's still moving higher. I'm not going to chase this, and I call it chasing because the RSI is over the 70 line substantially. It's at 74.75, so I'm not going to be buying at this point, at this level. Without a buy signal, I won't get back into anything, okay? So if you're long this one, you can still be holding with it, advancing your stop as you go, and if you're not, I go find something else. A quick little look here at the oil index, still very strong. Here was the buy signal, advanced for a few weeks. Did stop some people out. Anybody who had a stop at the previous candlestick's low would have been stopped out right there. But if you didn't get stopped out, you're still moving to the upside. I would like to point out this can continue that way, but you should note you are getting some overbought signals, such as you are trading now closing above or at the upper Bollinger Band line here, this light green line right here, and you are well above the RSI 70 line, RSI at 76.32. Those are extremely overbought conditions, so keep a tight stop there. All right, a quick look here at the Russell 2000 Small Cap Index here in the U.S. Notice this trend line here. Oh, you had this move to the upside here, bullish engulfing buy signal, and she's advanced for a while. You got another one back here. You could advance to stop here and continues to move to the upside here. And then some more consolidation here and coming down close to this trend line here and then bouncing off of it again. And this week, giving us another buy signal. So you could be a buyer here with the stop right there, very tight stop. But keep in mind, you are above the RSI 70 line. Here's the thing about the RSI 70 line. It's a very trustworthy indicator for me. You've seen it used in the past, okay? But in this particular market, everyone's talking about the Fed and the Fed stimulus program, the QE2, and so forth and so on. So if previous signals have not been considered overbought, have not caused the market to sell off because of the quantitative easing of the Fed, that mentality out there, then some could argue that this could stay above the RSI 70 line for an extended period of time as well. That's true. I'm not going to argue that in either way. My point, whenever I'm analyzing this trend, is just wait for it to turn on you. Don't anticipate what it's going to do. You'll get burned doing that. I've done it myself. So what I'm doing is just keep trading to the long side until she rolls over on you. Like I said, there's ways to do it and a smart method, and there's ways to do it stupid. So don't go out there and just toss your money out there with no stop loss limit or no exit strategy. I mean, you got to have some intelligence behind what you're doing there. But definitely use the trend that you're in. And currently, a lot of people are calling for a pullback and a pullback and a pullback, but it's not happening. But what is happening is you're making these advances here and then pulling back to the trend line and then advancing and pulling back to the trend line. Well, if you continued that, you could continue this for an extended period of time. So don't be so quick to say it has to pull back. In fact, these little intraday activity that you're seeing that's give us weeks is actually a pullback to the upper trend line. So there's some situations that have not pulled back yet and some that have. Find the opportunities that best suit you. Okay, we got a quick look here at the S&P 500. Same trend line everybody's playing on. And you've had a nice move to the upside. Here is the buy signal. Here's the stop loss limit. And you continue to move. We've been a holder of this long position here for a while. And we'll continue to do so until we see some reversal signals. Right now, we are now above that RSI 70 line. But again, don't anticipate it's going to break down. Wait for it to prove itself. And this could be a while. You're not trading up to the upper Bollinger Band line there. So you could, in fact, still see another move higher. And this could continue to press that way. Next week, in the U.S. markets, the markets will be closed for Martin Luther King Jr. Day on Monday, so we don't open up again until Tuesday, and that's when markets will start trading again here in the U.S. And I expect that you'll continue to see more moves to the upside in this market, behaving the same way it has been, unless some major news comes out and breaks. I expect the same to continue. Okay, silver's the same story as gold. Did the same sell signal here, broke the uptrend lines you had been trading on. Notice back here, you can have a down week that just pulls back to the trend line and advances right from that point on, pulls back to the trend line, entry week, and advances and pulls back to the trend line, advances, and so forth and so on. So just because you're waiting for a pullback, if it touches that trend line, doesn't break it, it's a buying opportunity, not a selling opportunity. In the current situation here with silver, we're looking at a sell signal here. I'm not going to, like I said last week, I'm not going to sell this personally. I'm not going to go short the metals, but you can see a pullback here to the middle Bollinger Band line or something of that nature. That would make sense to me. So just remain nimble on this trend, but it's not a buy at this moment. Okay, last week we told you about the TSX, Canada's markets. We told you had a sell signal right here, a bearish engulfing. You had been above the RSI 70 line at that point, so it made sense to see that. And then we told you to expect a pullback to test this up trend line, and that's exactly what happened. See this pullback happen intra-week, touch that trend line, and bounce right off of it. All right, so that they're considering this activity as their retracements. All right, you had a bounce up here, pullback, touch, advance, pullback, touch, advance, pullback, touch. You can advance again. All right, keep a tight stop, but in all situations like this, pull back to the trend line, touching the trend line, and not breaking, closing below it would still be a bullish uptrend. You'd still be a buyer. And not in this particular situation because you don't have a bullish signal time to get back in, but in talking basically about U.S. markets, how they've been trending consecutively to the upside, they're going to have weakness and from time to time, but don't be so quick to jump on the shorts. Okay, just be looking for the trend to break down before you get overly bearish, and otherwise continue to trade the trend that's being created by the Fed. All right, a quick look here at the VIX one-year weekly chart. We talked about this in the past. The VIX runs the opposite of the overall U.S. market. So if the markets are bullish, the VIX should be bearish and vice versa. In this particular case, obviously clearly defined downtrend line. And you'll notice you have a bearish engulfing signal of the previous candlestick, previous week's candlestick. This would tell you to look for more selling in the VIX and therefore more buying in the overall U.S. markets. A quick look at our disclaimer. Read it and weep. God bless. Take care. Enjoy your 3-day weekend if you're here in the U.S. and be safe. I'll see you all next week.